Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you are doing well. And in today's markets, guys, well, it's no secret you've seen by now, we absolutely got crushed today in the markets. And that is for a few key reasons. We had a narrative shift by the Federal Reserve and Jerome Powell really shifting his tone from one of confidence to one of some sort of uncertainty. And we've been warning about this on the channel, guys, in terms of the expectation for some weekly consolidation. Now, we were not sure as to what was going to be the catalyst for the weekly consolidation. However, I had been warning about this for the past roughly 2 weeks on the channel at this point, that despite all of the bullishness, I was saying to be quite cautious in the markets right now. A lot of bullish sentiment going on, a lot of call options being purchased, and you know that in that case, Wall Street will use any single excuse that it can possibly find, especially when uncertainty comes on the table, to drop the markets in a very, very rapid fashion. So in today's video, guys, we're going to take a look at a few key things, because I know that psychologically days like this can be very hard to manage. So I'll do my best in trying to convey what exactly is happening in the markets and how it can possibly best position into the future. So what we're going to cover today is, number one, do a big recap of exactly what happened during the Federal Reserve meeting with Jerome Powell and exactly what can be the possible catalysts moving into the future and what the impacts in the short and medium term can be in the markets. Thereafter, we're going to do a full technical analysis rundown on our major stock market indexes, because we've had some pretty steep declines. The Dow Jones yesterday, after 9 days of losing streak, was the worst period of losing since 1978. Add one more day like today to it, and now we're back all the way to the worst losing streak since 1974. The Russell Small Cap Index coming down almost 4.5. That was the worst day since April of 2020 from the COVID crash cycle. So a lot of downside was happening in the markets today, and unfortunately, with 1 day's worth of move, we have now erased arguably the last 3-4 weeks of trading as a whole. So we'll be taking a brief look, or rather not a brief look, a deep dive at all of your indexes, see how those are positioned as well. Then take a look at our big tech names, because we had been saying that big tech was carrying the markets, but if big tech got a little bit tired and rolled over, that could lead to some extended consolidation and some larger declines in the SPY and the QQQs, and that's kind of exactly what transpired today. So none of this should come to a surprise to anybody that was watching my videos in the last 2 weeks. We were expecting the pullback. We were not too sure as to what the catalyst would be, but leading into this week, I did say that I'm holding a ton of buying power, because this is arguably today was the most volatile event that we had on the calendar pretty much until January, and I was waiting to see what happened today. So happily that I did protect my account, save a lot of buying power, and hopefully you guys were able to heed those warnings and also possibly do the same. And that'll pretty much be it, guys. No portfolio review as to today. I will keep that on the Friday session as per usual. I only do the portfolio recaps Monday, Tuesday, and then on the Friday. We also had earnings from Micron and one of the home builders today, but I will be doing those on Friday. Today, we're going to be focusing more on what happened today, the narrative shift, and how it plays into the bear thesis that I was talking about roughly 3 weeks ago around Thanksgiving, right? Because we know that the bear thesis has a lot of points, and when you start ticking off a lot of these boxes, guys, that is what leads to the uncertainty in the markets, and that's why you see a little bit of defensive positioning and a lot of selling activity right now. So that's a long intro, but suffice to say, we have a lot to cover in today's video. Let us jump right into it, shall we? So the SPY down almost 3%, 2.98. The QQQ's down 3.61. We have a little tiny bounce going here in the futures market, but tomorrow, keep in mind, the institutions, after a day like today, well, a lot of them are on holidays to begin with, but when you're trying to reposition tens and hundreds of billions of dollars in the market, you're not going to do it between 2:30 and 4 p.m. on the day of the FOMC. They will digest the data and position accordingly, which is why these declines can potentially last into the next few days and possibly into the next few weeks as well. We have broken a few key levels on the SPY. Now let's take a look at the heat map, and you better put your sunglasses on because it wasn't very pretty, right? So the heat map, no secret there, everything red except for a few tiny little players in the healthcare sector. But we've been noticing that there was a lack of market breadth in the market for at least the past 2 weeks. Big tech was kind of carrying the entire market for the last 2 weeks. I mean, now they've almost erased all of those gains over the last 1 week. But if I put on the 1 month relative, you'll see what I mean. Big tech and the largest consumer defensive name, Walmart and Costco, they have been carrying the market almost exclusively. You haven't had any participation from the lower sectors, and that was one of the problems, which led into yesterday's video where I said that there was this one right here, there was a silent sell-off happening where all of the value names were pulling back hard, and not many people were talking about it because everybody was focused on the big tech gains and also gains from, a lot of popular companies such as Palantir, such as SOFI, right? Everybody wanted to buy the tops up here, Palantir of SOFI, other names as well, like AAPL, names that have ran a ton. I even got some new requests to cover companies, quantum computing companies that are up 3, 4, 5x in just 2 short days of time. So there's a lot of bullishness, a lot of focus on the risk on aspect of the market, but nobody was noticing what was kind of happening under the hood of the market. And that is something we always have to pay special attention to, guys. What is happening with the rotation, and is the market currently healthy? So there was your heat map for the day, and once again the weakness does persist, but now they've even managed to bring big tech along with it, which has kind of accelerated the moves to the downside. Moving on to the one-day relative, well, no secret there, everything is down a lot. Consumer cyclicals and real estate getting hit the hardest. That is because the rise in yields, and we will talk about those rises in the long-term 10 and 20-year yields. 1 week performance, no secret there. When you have a big brutal day like today, which, to be honest with you guys, we have not seen a day on the SPY and the QQQs like this in a very long time, right? This one day on the SPY, this is pretty much arguably, a 3% down day on the SPY. I don't think we've seen that since the Black Monday event in August the 5th, when the unwinding of the Japanese carry trade happened. Even that day only closed down 2.91, although it was down a lot more. It was down closer to 4.5. It closed 2.91. This is arguably the worst day of the entire year so far. So unfortunately, not a very Merry Christmas turning out to be right now. So what exactly happened today? Let us get into it, and let's also relate it to the bear market thesis. So I'll leave this bear market thesis on the chart as we kind of plow through this Federal Reserve recap. But the one thing, just to give some context, right? In previous Federal Reserve meetings, and even in the few interviews, interview sessions that Jerome Powell has given at a few conferences as of late in the last month, Jerome Powell was very confident in his status on the jobs market, the direction of the economy, and especially the direction on inflation. Now, when he started speaking today, and he started answering the questions, I was noticing that there was a much heavier focus on these slight upticks in the rate of inflation that we've been seeing September and October, not so much November, but September and October, we did see that CPI tend to curl a little bit higher and producer inflation as well. Now, Jerome Powell in his previous conferences, and even last month in November for the extra rate cut, had said that, well, that's just a data blip. It's going to be a bumpy path on the way to 2%, but we are very confident in the direction of inflation. When he was answering questions today, and if you have time, go watch his conference and you will see exactly what I mean. You could tell that there was a little bit of an uncertain, a little bit more cautious tone when talking about inflation, and he brought up inflation a lot. When he was answering questions previously in November during the FOMC meeting and during conferences, he was kind of just brushing inflation off to the side, being very confident, and also in terms of the labor market too, very confident status from Jerome Powell. And today, when talking about the labor market, he raised a few concerns. He said that yes, the labor market is indeed weakening, but not just in one aspect, in many different aspects. And as soon as I started hearing those two things, I thought to myself, oh no, Jerome Powell is literally going to send us down very hard. And that's exactly kind of what happened. So we're noticing a narrative shift from the Fed, not just from Jerome Powell, but from other Fed members on the committee as well, to where they're very confident about the direction of inflation, very confident about the jobs market as well. And now they're kind of giving themselves an open door on either side and taking a much more cautious tone. And what does the market not like more than anything, guys? The market does not like uncertainty. So when Jerome Powell is talking on the stand and he starts adopting a more uncertain and a more hawkish tone, the market is going to respond to it in a very brutal fashion. So let's dive into exactly what was said. So as you can see right here, Fed meeting recap. Powell says central bank to be cautious on rate cuts, rocking the market. It definitely did rock the market in a big way. The central bank revised its outlook for rate cuts in 2025, however, indicating that there will be 2 reductions. That's down from the 4 that were forecasted in September. Fed Chair Powell said that the central bank will be looking for progress on inflation, noting we had been moving sideways on 12-month inflation. He has not said that before. He said it was a bumpy path, but they are confident in their target to be able to achieve 2%. Now, here is exactly what happened. I was telling you guys that 100% we were getting a rate cut today, which we did. He dropped it by 0.25. And this was the most important, the summary of economic projections, the dot plot. Where does the Federal Reserve see the rates in 1 year, 2 years, and the longer term normalization rate? Take a look here. The previous expectation from September for next year was 3.4. We came in at 3.9. So literally reducing the amount of rate cuts by half. Take a look at the second year. It was supposed to be 2.9 for 2026, now at 3.4. 2.9 was to be the third year, now 3.1. Do you kind of see what I mean here? This, and I always said, guys, in the past few videos, I was saying that if these have a notable uptick, the market is definitely not going to like it. And look how your longer term yields responded to this, guys. They were up an absolute ton today. I mean, the 10-year is cracking on the verge of 4.5 again, going for the weekly uptrend. And the 20-year yield also did not respond too well. Jerome Powell was asked a direct question, and he actually answered it for once in terms of the direction of these. And he said exactly what I tend to say when people ask me for the analysis on the 10, 20-year yield and TLT. He said there's very complex factors at play in those longer duration yields. And that is indeed true. This is the speculation from bond traders, guys. Nothing more, nothing less. What you are seeing today is the market is saying that the Fed is wrong. They are calling out the bluff. They are saying, listen, something is not exactly right here. Jerome Powell is not telling us something. And today he hinted at it. He said, very uncertain tone around both inflation and both in terms of the jobs market too. And that is something that he has not said before. So now what the market is doing is they are having an interest rate temper tantrum, the same type of thing that happened in late 2018 that sent the SPY down 15 to 20% in just 2 short months. Now, I'm not going to be so, how can I say this? So confident in saying that that's exactly what's going to happen, in the next 1 month or two. But just when the market goes on these temper tantrums because they're not getting what they want and there's uncertainty at play, they will respond very, very quickly. Stairs up, elevator down, as they say, right? Now let's move further, shall we? So here, consumers are feeling the effects of higher prices, not higher inflation, Powell says. He talked so much about inflation today, I was surprised. We understand very well that prices went up by a great deal and people really feel that. And it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. He used a lot of keywords that algorithms did not like today. Now we have inflation itself. Inflation itself is way down, but people are still feeling high prices. And that is really what people are feeling, right? So focusing on the fact that the job's just not done on inflation, right? And adopting more of a cautious tone. And you could see by the summary of economic projections, they want to keep rates higher. They want to leave the door open in the event that inflation has a little bit of a resurgence. They haven't cut the rates too much and they can stay firm and really start crushing inflation down once again. Now, moving on further, Powell added that the best solution for this is for the Fed to continue working to get inflation back to its target so wages can keep up. What can they do? Well, they can keep rates higher for longer. And that's exactly between the lines what Jerome Powell told the market today. Let's move on further, shall we? So the labor market is cooling in a way that doesn't raise concerns. Now, here's something funny. We do think the labor market is still cooling by many measures. This was a misstep by Jerome Powell. In the past, he has said that the labor market is cooling but remains healthy. Now he's added by many measures. Once again, the market did not like that, guys. Before caveating, it's not cooling in a quick way or in a way that really raises concerns. And when asked on the direction of the economy, he said that he was very optimistic for 2025. So here's a bit of the paradox right now between Jerome Powell's speech and why the market responded in the way that it did, especially in relation to the interest rates, right? If Jerome Powell is saying the economy is going to be healthy and that the jobs market is still going to be good, although cooling, but people are keeping their jobs, but just maybe companies are not hiring as much as they used to prior to the pandemic, which is what he said. Well, what is it, Jerome Powell, right? If the economy is going to be so good, right, that you guys don't need to cut rates, well, what's going to happen? Is he essentially saying that the economy is so good that consumers will keep spending, which will result in higher and higher inflation? He didn't say that, but that's kind of what the market was trying to read throughout the line. So Jerome Powell gave a very, very confusing message to the markets today, and analysts and traders are still trying to decipher what exactly went on and what is the direct messaging from the Fed, because it has been clear for the last 2 years, and today is the most unclear that I've heard Jerome Powell speak In 2 years' time, when they were increasing rates, they were very, very firm on the direction that the Fed was taking. When they were maintaining rates at the peak, they were very firm in saying, no, the job on inflation is still high. The jobs market is still relatively resilient. So we're keeping rates high. Now we're kind of in an in-between zone. And it seems as though the messaging from the Fed is becoming more and more unclear as to what they're trying to do. And threading that needle is also becoming a little bit more unclear as well. Now, let's move on further. Some FOMC members taking preliminary steps to forecast Trump policies. This has also never happened. In November, he was asked whether or not that politics, he gets asked this every meeting one way or another, he was asked whether or not the Fed's decisions are impacted by fiscal policy by the government or by political stances on the economy as a whole. And they've been very firm in saying, no, the Fed is completely independent of policy, especially fiscal policy, and in terms of political stances, right? Especially noting on to tariffs. Last time he was asked about tariffs, he said, it's too soon to tell. Well, we don't really know, but we don't really see a meaningful impact. Listen to this change of tone by other Fed members here. Some people, talking about his colleagues at the Fed, some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of the policies, Trump's policies, into their forecasts at this meeting, and so said at the meeting. So we have a bunch of people making different approaches to that, but some did identify policy uncertainty as one of the reasons for the writing down more uncertainty around inflation. That has never happened, guys. That is a mistake by the Fed. They are directly tying their decision into the policies of the Trump administration. The Fed has never done that through the Biden administration, not through the inflation cycle that we had through 2021 and 2022, not while rates were remaining high either, right? So they have never said that under the Biden administration. And now that the administration of Trump is coming in with tariffs, apparently a few members are taking it upon themselves to incorporate these policies into their decisions. The Fed is supposed to be independent of that. Another reason that the market did not like what they were hearing. The Fed chair, Powell, later discussed tariffs proposals specifically, saying it was too early to have a definitive answer or how they could impact inflation. So he's kind of defending his own stance and kind of trying to defend the Federal Reserve as a whole, but saying that his fellow members did start to incorporate the risk of tariffs and their possible impacts. That was also a mistake. So Powell today, guys, arguably one of his worst deliveries in the last 2 years. He tried to save it a couple times. I listened to the entire speech. He tried to save it as best as he could, but the market, when the damage was done, they were just not having it, guys. The market does not like uncertainty, and he gave us too much uncertainty. The jobs market is steady, but as he said, many factors are weakening the labor market. Number two, uncertainty surrounding inflation and raising the inflation estimates. I'm not sure that we have it right here. We don't have the inflation estimates right here, but they raised the inflation estimates for the end of next year from 2.1% inflation overall on CPI to 2.5%. That is a very big jump, guys. So not only are they keeping rates higher for longer now, they raised the inflation expectation. They said there's many, many catalysts currently that could possibly affect the jobs market to the downside. So what do you guys think happened? The market did not like this, guys. We are seeing a clear narrative shift. And where is the narrative shift happening, guys? We are ticking off more and more and more boxes for the market, either recession or the bear market thesis as a whole. Unemployment will skyrocket. Jerome Powell did not help that at all. The Fed is too late. Damage is done. He did not help that at all today. The data is fake. CPI, jobs, and economic output. He did not help that at all by putting uncertainty surrounding CPI and jobs moving into next year. Trump, tariffs, and economic mismanagement leading into a resurgence of inflation. He definitely did not help that at all, and neither did his fellow colleagues at the Fed either. The market is overvalued. I myself had been warning about this for the past 2 weeks. Did not help that. Notice how many check boxes we're checking off right now. Buffett is in cash, other notable CEOs selling. Well, we got Buffett recap after his most recent quarter, and he has the most record cash. So that is another check. U.S. debt ceiling crisis. This is still debatable. I mean, they are implementing the Department of Government Efficiency with Elon and Vivek with Trump, and they do want to bring the debt down. So this one, I'm not ready to check off for the bulls just yet. Consumers over-leveraged on credit, not ready to check this off as well. We checked Visa, MasterCard, American Express earnings, and the bank's earnings. Consumers were not over-leveraged as of right now. Commercial real estate crisis, not a big deal right now, but if these rates, 10 and 20-year yields, keep putting pressure on the markets, guys, it's not going to help that thesis either. Rest of the world in recession. Jerome Powell literally talked about this today. I can't find it, but let me see if I can actually find it real quick right here. There was one portion of this article, I believe, maybe it's not in this one, maybe it was in another article that I read, but he said the US is performing the best across the entire world. Look at the dollar today, guys. The dollar completely skyrocketing again. Every single other major currency is really suffering right now, whether it's Latin American currencies, European currencies, Asian currencies as well. Everything is falling against the dollar. The rest of the world is not doing too well. People are flocking to the US dollar and to the US stock market because of its outperformance. But now Jerome Powell just put a big stick in everybody's wheels and could kind of halt this market rally right now. Moving on further. So that one does check the box right now, right? People flocking to the dollar. That's putting pressure on yields rising higher. It's also putting pressure on the dollar, right? And putting pressure on equities as well when you fulfill all these boxes. AI and tech bubble. I cannot begin to tell you guys how many questions I've been receiving in the last 2-3 weeks about stocks that are going up 40, 50, 60% in 2 days, 2x, 3x, 4x in 2, 3, 4, 5 days. That's when you know, guys, people are getting way too greedy. And when we're at the all-time highs, as I was showing you, right? When we're at the all-time highs on SPY, right? And we have not had a weekly consolidation for a while, and we're trading extended away from the 12 EMA, and everybody's super bullish, everybody's piling into tech and ignoring the signs under the hood. Well, this is exactly what you get, guys. Wall Street traps and runs the other way, and then everybody panics, and then it's very simple, right? Everybody was bullish on Palantir, everybody's bullish on Tesla. Watch. You get a few big more red days like this, and they will just give up. They'll say, oh no, it's done, forget it, because they haven't invested in the companies for the right reasons. So that is once again a sign of people being over-leveraged, over betting on call options, short-term direction, trying to catch the home run trades once again, which I always advise against doing. Now, the yield curve uninverted, this is happening. We will see whether or not it triggers a recession. The SOM rule, 0.5% increase in the last 3 reads. That as well is up for interpretation. Not yet happening. We will see if it triggers a recession. Manufacturing output week, well, no secret. We got one of those on Monday, guys. And once again, I've been talking about this. Manufacturing output has been weak now for a while, right? You can see another read under 50 for the S&P Global Manufacturing Index. That has to stay ticked. Anecdotal experience, this is up to interpretation. My friends are broke. And the indicators, smart versus dumb money, percentage of stocks above their highs, and the put call ratio and the VIX. Well, funny thing, like you look at the VIX today, right? The VIX was at arguably, right, yearly lows, all-time lows, historical lows. That is usually a sign that any little pop, any little thing, any little trigger is going to result in a big pop on the VIX, trap a lot of traders. Put call ratio as well. Here's the put call ratio on the SPY. As you can see, it's a very messy chart, but we're towards the lows. As this chart goes up, it means more and more people are hedging. Obviously, when it's down here, nobody is buying put options, which is why when you have volatility and the VIX goes this high, that is synonymous with people are flocking to insurance, buying put options like there's no tomorrow. Indicators as well. I was telling you guys, watch for the weakness, percentage of stocks above their 50-day. Now look, we just crashed. Now only 30% of all stocks at the end of the day today are above their 50-day moving average. That is not very good. It's the same thing as the black market, the Black Monday crash after the Japanese carry trade, the April after the inflation resurgence fears happened in January, February, and March. And all the way back here in October when we had the same inflation concerns, right? And here, all the way back here is your small and medium regional bank crisis. In terms of the stock percentage of stocks above their 200-day moving average, I was saying we were trading relatively high, but we're still healthy. But any pullback, guys, is going to trigger a lot of these things. And now percentage of stocks down to about 50%. So now, once again, we have to give that point as well to the bears. Everybody was too greedy, not noticing the signs under the hood. So another point to the bears. So how many check marks is that, guys, for the bear market thesis? It is a lot, right? And usually when you have this many, the market is not just going to snap its fingers, undo today's downside declines, and just reverse in a single burst. If you want my outlook, and this is going to be very important, keep in mind, I do not have a crystal ball, but the secret here is in the longer term timeframes, and we'll study these in a little bit as we move into this technical analysis. So speaking about the technical analysis, I will give you possible projections. And it also starts with the monthly time frame. Notice how extended we are from the 12 EMA. We tagged it on the Black Monday sell-off of the Japanese carry trade, but never since. We've been trading very, very extended, and the only times that we've done that are in the context of extremely somewhat overvalued bull market rallies like 2021. You will notice if you go back in time, when we get too far extended, here is 2018. When we get too far extended, we can have some big violent pullbacks into the 12 EMA, but usually we do not get so far extended before having some decent pullbacks every 3 to 6 months perhaps. So once again now, we find ourselves that it's been about 3 months since August, 4 months to be exact, and we find ourselves far away from the EMAs. I would not be surprised, but keep in mind, guys, Trump comes into office January 20th. There's a lot of uncertainty around the tariffs, what he's going to do with the economy, how he's going to cut government spending. There's a lot of uncertainty, right? I would not be surprised in the slightest, and I'm not saying it's a prediction, I'm just saying I wouldn't be surprised if we consolidate here December ending red, January possibly as well, into the Trump inauguration, and then the market is down, and then Trump kind of takes office and maybe renews people's bullishness come early February. We hit the lows in February, and then the market starts to rally before the summer session, which is usually weak, right? Something like this, if you were to watch this, if you were to come back to this chart, do any of these moves look awkward to you? No, we always have to have monthly consolidation eventually, right? Does this move look awkward to you right there? Probably not, right? So if we are in a bullish environment, no recession, comes sometime in 2025 or 2026 when we're all the way up here, would a pullback like this really look that bad on the chart? It would just look like normal price action, right? So we have to keep that in mind, guys. We would not be surprised if that does last. Now, obviously, there's a lot of trade left before then, but we flushed some very big levels today on the SPY. Number one, we flushed our short-term support area. Daily downturn, we were on the watch for it. And I was saying, do not be surprised, guys. There's a lot of problems under the hood. Value names are not doing too well, and the market was not broad at all. Big tech was doing all the heavy lifting. And I was saying, all it takes is for big tech to roll over and watch out. If the rest of the market is not there to support it, we're going to fall, and we're going to fall fast. And that's exactly what happened today. Close at the low of the day. It's going to be very hard to reverse this, guys. Daily downtrend at this point in time, if we do not continue and we bounce as of tomorrow, we are going to be looking for a lower high into possibly lower low continuation, right? So daily downtrend underway, coming into the next level of support because we lost this one. This is going to be 585 all the way down to 576. Let me just check if I'm recording. Yes, I am. It would be a big shame if I wasn't. So moving on further, guys, right? 585 down about 576, let's call it, is the next zone. This is the gap fill from the election day. So keep that in mind, guys. Heavy momentum, still not daily oversold, but we do have short-term oversold conditions. The RSI on the SPY right now is flushed at absolutely 15 right now. The VIX has moved in a tremendous way to the upside right now. So I would not be surprised if we do have a little bit of, recovery in the SPY and the QQQs. But always know what you're looking for. It is now a daily downtrend. We're going to be looking for a lower high. And then it's up to the bulls to prove to us, can they give us a nice enough bounce to get the daily uptrend back? Because if they do not, if they bounce very, very shallow and start rolling over, you guys know what's going to happen. We're going to retest the lows or go even lower and retest the support, possibly even go for the election gap fill. So now it's very funny, right? A lot of bullishness post the Trump election. And now over the past few weeks, as this uncertainty around tariffs and the responses by other companies, as that uncertainty mounts, right? This is exactly what happens. The Trump bullishness now turns into a little bit of Trump bearishness. And even the Fed has started shifting the narrative as well towards the impact of tariffs. So we are seeing, guys, a narrative shift in the market. And I always tell you guys, the market is driven by narratives. Yes, it's driven by fundamentals as well, but narratives are a very big driver for the market, guys. And what the market doesn't like is uncertainty. And to be quite frank with you, I do not believe the market will get the uncertainty until the January Federal Reserve meeting, until we know if the Fed's going to pause or not. It seems as though they're going to pause, but until they say we're going to pause and keep ourselves data dependent, and until we get more policies from Trump after his inauguration, the uncertainty in this market can simply persist. And if we lose a little bit more on the weeklies, guys, we will lose this level right here. If we lose 583, you will lose the weekly uptrend as a whole. It's been a very nice weekly uptrend since the Japan carry trade unwound right here. A very nice weekly uptrend for the past 4 months. If you flush this level, keep in mind, we will just be looking out for a lower high into lower low weekly downtrend. And this point in time, we have not had a weekly downtrend, guys, since October of 2023 when we set this one back here. And I will remind you, why did we set weekly downtrends back here? Because the inflation concern for a second wave of inflation or stagflation was front and center in people's minds. And after today with Jerome Powell, that is exactly what seems to be happening once again. The focus is on inflation. The focus is on interest rates being higher for longer, which is not the best for businesses that rely on, interest rates to raise money, of course. And it's also not good for consumers who are possibly looking to buy homes, cars, appliances, and everything else that requires some financing, right? So that is the analysis on the SPY, guys. They cannot reverse this in one day. It is going to be very impossible to reverse this damage. My expectation is for further downside consolidation into the SPY until we find a true bottom, until maybe we get daily oversold conditions. As you can see, it's not daily oversold. The carry trade unwind was daily oversold. We also had daily oversold back in the month of April, which did signal a bottom. The last time we were oversold was all the way back here, which does signal sometimes a temporary bottom, but doesn't mean you can't just roll over a little bit further as it did back there. So pay special attention. We've lost the 50-day MA as well. All of the time frames, guys, on the daily, or all of the signals on the daily are lost. On the weekly, we are rolling over this weekly time frame. And if it ends further than this, you can expect some downside follow through all the way down here, guys. 565 down to about 560 is the next area of support. We will see how they react. 26 EMA has been not tested, but closely tested a few times so far in this market. So that's why we can expect further downside consolidation, and no one would truly be surprised, right? So keep that in mind, guys. I don't want to project too far. I don't want to get ahead of myself right here. None of the fundamentals of any of these companies have changed, but what has changed today is a narrative shift. And I have always said on the channel that I'm cautiously optimistic. I'll be data dependent. And when the narrative shifts, I will also shift. Now that the narrative has shifted and that we may not get any clarity before the end of the month of January, you will see a clear shift in my positioning as well. I'm going to remove a lot of the call options that we've opened recently because it's went from a risk on narrative to now shifting from risk on the past 2 weeks, right? You've noticed a clear shift where the high flyers have continued running. Big tech has supported the market, but under the hood, there has been something wrong. Now we see what's wrong, guys. And that is not an easy fix for the markets to get over. This is a narrative that until the Fed gives us more certainty in January, Jerome Powell can correct some of the mistakes that he made today. Well, not mistakes in terms of policy. I'm talking about how he addresses people's concerns. You want him to be reassuring with a plan, right? And until we get more clarity from Trump, that's still about a month away, guys. So it can be a very bumpy month of trading, a very volatile week. There's going to be very large upswings, right? Very large upswings, but there can be very large downswings as well. So just pay special attention to that. It's now risk on to risk off and uncertainty. When there is a clear narrative shift, we have to adjust our positioning. And I know risk management is not a sexy topic. It's not me telling you buy Palantir calls at the top and try to make 2-3x on your entire portfolio and retire your entire family in 2 hours of trading. It's not sexy. Risk management is not sexy, but it has to be front and center, and only on days like today, right? Every other day, nobody cares. When you get a big day like today, it's funny, everybody starts to think about risk management. So keep that front and center, guys, and do not be emotional. Approach things logically. We are noticing a narrative shift, so we have to shift our positioning accordingly. Could we have sold yesterday or the weeks prior before today and protected some more of the gains? Sure. But now, what do you want to do, guys? The damage is done, so we have to readjust our positions. We'll have a very long journey in the markets together, I promise you. One day of trading is not going to change everything, but we have to play the narratives in the market. And when we know that this narrative can possibly not be solved for another month, well, what good does it serve me to position extremely heavily after only 1 day of selling when institutions have not even digested the data? They are not positioning between 2:30 and 4 p.m. the week before Christmas, guys. Trust me, they are not doing it. They will do that over the next 2, 3, 4 weeks and into the new Trump presidency. Moving on to the Qs. Now that we've done that on SPY, let's move into the Qs, right? So Qs, same concept. Daily uptrend was nice. Now we lost the daily uptrend as a whole. So they flushed the lows right here, 519. So at this point in time, daily uptrend is lost. And then we look for possibly a bounce. We'll watch for the size of the bounce when it happens. Coming into support right now, 515 out of a 510. If we get a bounce, we are always looking for a lower high. Depending on where the lower high is, if it's all the way up here, the bulls can get it back, right? If the lower high is something like this, well, then we may just absolutely roll over, and I'll keep you guys posted on what's going to happen. But as of right now, it's not looking too good in terms of the daily timeframes, nowhere close to even close to being daily oversold. So we cannot say that this is the absolute bottom of the move. On the weekly as well, well, the weekly doesn't look that bad. Anything above 493, the bulls create a lot of space in tech right now. Anything above 493 looking for a higher low for further trend continuation. But I will warn you again, if we take back too much of this move, do you think the V-shape becomes more and more likely or less likely? Less likely. If it takes back too much of the move, you get a rally, can result in a lower high, possibly the weekly downtrend into the month of January. Look at the time. Well, maybe my head is in the way, so let me try to move. The chart actually. So my head is in the way, but I'll put my cursor, right? I just did this little Picasso drawing. Look down below. Look at the date at the bottom of the chart, right? This would put us right here. Now, I'm not saying it's going to work, but if the market does this, it would look natural, right? I don't think I've accelerated the move too much to the downside. This would look like a clear weekly downtrend, correct? Look at the date down there. It says Tuesday, 21st of January, the day after Trump is inaugurated, essentially, right? It could do something exactly like that. I'm not saying that that's exactly how it's going to play out, but you would say if it does do this, it wouldn't look too strange, would it? So we have to keep that scenario in mind, guys. Even though the bulls are working with a lot of space, the uncertainty surrounding the market right now and how much big tech has ran, they can afford to pull back a decent amount more. The monthly, keep an eye, only 10 trading days left on the monthly. We are monthly overbought conditions on the Qs right now. I know they can stay overbought for quite some time, but I'm pretty sure no one would be surprised. No one's surprised when the chart looks like this, right? No one remembers what happened back here. I do in October. No one remembers what happened here in the month of April because of inflation concerns. I do. A lot of people already forget what happened here in August, but all of these are monthly higher lows. So can we just be looking for another monthly higher low for further trend continuation? It wouldn't look too bad, would it? That is on the table, guys. So you have to pay attention to all of these flags, the red flags to say the least, right? Now, financials having their worst day all year. This is clearly the worst day on financials by all year. Even the unwind of the Japanese carry trade, Monday, the 5th of August, right beside me there. Monday, the 5th of August was only down 2.9%. Worst day in financials all year, and dare I say, almost in the past 2 years of trading. It reminds me of 2020 or 2022, right? Daily downtrend by the bears, extremely strong right now. A lot of momentum to the downside coming into daily oversold conditions. When's the last time we had daily oversold? You'd have to go back a while, guys, all the way back here in October of 2023. And then after it bounced and continued sliding even more before it found a true bottom. What are we trying to do right now? We are going exactly in the direction that I thought might be the case in the event the market's unraveled, especially when yields are moving higher, right? 46.73 is the gap fill. So although we do have a little bit of support here, 47.50 down about 47, the gap fill is becoming more and more likely at this point, right? And now keep that in mind. Both bears are very strong. We could be getting a bounce, but bounce is just going to be looking for a lower. But the size of this move, guys, any bounce just looking for a lower high, probably into lower low. We'll see if the bulls can protect and reverse. But right now, looking like the downtrend wants to persist. Weekly, giving up a lot of space. Anything above 46, still looking for a weekly higher low. But once again, give back too much of this move and you open the door for best case scenario, tightening range. Worst case scenario, you open up the door for the weekly downtrend, something we have not had since October and fall of 2023. So please keep that in mind. I'm not trying to sound too bearish. I'm trying to set the expectation of what could possibly happen so nobody ends up surprised. Could we just reverse everything from here? Sure, but it's not looking good because we've lost big daily levels and the weekly is engulfing a lot at this point, guys. The bulls are not very strong and we still have not seen the rest of the market positioning into the next few days, next few weeks after today's reaction because of Fed uncertainty, which they cannot solve until January and which Trump cannot solve as well until he is in office. We still got a lot of time. Healthcare right now. Healthcare continuing to push lower and lower and lower. Not a great day for healthcare. 1.36% to the downside. 137.38. We are still trying to protect this area of support. 141 and about 135, because if you break through this, guys, you're going all the way to the lower end, and we're literally undoing the past rally since November, if that's the case. Right now, you have lost the monthly uptrend. We have now flushed the monthly lows. We'll see if we close below there, but we are losing the monthly uptrend on healthcare as well. Weekly downtrend persists, still, unfortunately, not weekly oversold just yet. Daily conditions are now at RSI of 22. The last time that that's happened was all the way back here in, well, you have to go back a long time. Back in 2021 was the lowest point, and even a bit 2022. So healthcare hitting levels not seen since then. And I'll remind you, a lot of uncertainty surrounding, once again, Trump's policies, potentially for healthcare insurers and RFK Jr.'s policies, or what he wants to kind of act in, or what he kind of wants to enact in terms of transparency for pharmaceutical companies. So too much uncertainty around healthcare right now. So for that reason, I'm not playing the sector. It's the loss of the monthly uptrend, arguably weekly downtrend, daily downtrend. So I'm not trying to pick a falling knife right here. I'd need to see the bulls eventually recapture the daily uptrend for me to position in any of those companies. SMH, once again, getting rejected, 260 down to about 250. Micron had their earnings. The guidance came in a little bit weak. We'll cover those on Friday, but Micron was down 4% today, all the news, and down an additional a lot in the after hours here. Take a look at the after hours. They're down to about 87. This from the top of the day, guys. From the top of the day, they're down 22% off of good numbers for the quarter, decent numbers for the quarter, but slightly softer than expected guidance. And after today, guys, the market's just not going to give you any passes whatsoever. It's going to absolutely flush everything at this point in time. So SMH going to react to the downside tomorrow once the markets are live. Now, where can we possibly be going? Well, if we lose this area once again, guys, we're going to be coming right back down to our support range, 235 down to about 220 on SMH. We had the daily uptrend, but now it is not looking good, and I would not be surprised if we flush that tomorrow. Tail of being once again trapped between two ranges. We will see, can the sector continue to expand as per the bull case thesis into 2025? Well, maybe in 2025, but might end 2024 in a weekly downtrend and a retest of this support down here, 230 to 220. We will see how it reacts, of course, over the next coming days and the next coming week. I still think there's some great opportunities, especially in NVIDIA, if it comes down a little bit lower, AMD, and a few other names, but the sector as a whole is just not cooperating, has not been cooperating since July, so we'll see what they have in store for us come the new year. IWM Russell. So the Russell has been a pain point, just as the Dow Jones has been for roughly the last 3 weeks of trading. That is the lack of market breadth. I bring this up all the time. I brought this up every single day for the last 2 weeks of trading because I wanted to reinforce. Small caps will not run, guys, not with yields moving higher the way they have been, the 10 and 20-year yields, not with that, and definitely not with financials, industrials, healthcare continuously pushing to the downside over the last 3 weeks of trade. So obviously the Russell, the worst performer on the day by far, and its worst day since the COVID crash of 2020. That being said, daily downturn right now is simply clear as day, right? The lower highs are pretty much right here, 235.70. At this point, we have flushed through a massive level. We have given back the entire election rally, the entire thing. So the Trump trade unwinding very, very quickly right now. We have now, if the monthly closes like this, guys, this is a big red flag in my opinion. This is monthly supply zone. You see when it creates these, I call them railroad tracks, where it goes down and then brings it back up in one candle. This shows you that there is a lot of buying pressure down there. It is what, you know, it is what's called a demand zone. If it closes up here, it means it's a big area of supply. I was counting on the bulls to protect breaking over the all-time highs, the breakout, the retest trade. But once again, the breakout retest trade is not a 100% trade probability, right? It is a good trade idea with high probabilities, the same as a head and shoulders type of thing, but it's not a 100% hit rate. So at this point in time, losing this big level, 231 down to 225, red flag in my opinion here, guys, because now we've done a few key things. Number one, we've now lost the weekly time frame clearly by flushing those lows. This area, if we close this candle like this, will become now resistance, and if the bulls try to push into it, it'll be looking for lower high with resistance into possibly lower low, heading down here, 214 down to about 204. So the IWM Russell trade not ready just now, guys, and I have a call option on the Russell, which I will probably be closing tomorrow. I'll be unwinding this trade. Unfortunately, it'll be a little bit of a loss for me. We actually opened it here. We were up nicely for a very long time. It was looking into today, and now unfortunately, we just round tripped all the profits into a loss. What can you do? The narrative changes. You need to adapt. I'm not going to hold the Russell, guys. If the Fed is going to be very tight on its policy, keep rates higher for longer, if there's some concerns around inflation, what do you think that's going to do to the businesses that need financing, right? When rates are this high, they're not going to perform too well at all. And arguably, a lot of their interest rate sensitive sectors, such as financials, industrials, and healthcare, leading into the Trump uncertainty with his policies on healthcare. What do you think is going to happen to the Russell, guys? You think it's just going to shoot up, V-shaped, skyrocket recovery? Probably not, right? So time to best position. This was a trade attempt by me going for the bull market expansion, but unfortunately the bull market did not expand in the same way that people were hoping, especially not in terms of the Russell. Some small cap names here and there went on record performance, of course, but the index stays relatively muted. So for me, once again, I am out. It's the same reason that I refused to position this entire time. Then I went for the breakout retest and run trade. It worked out for a little bit and for literally 4 or 5 days. And thereafter, guys, it's been nothing but broad market consolidation and a lack of market breadth. Now, moving on to the Dow Jones. How far are we into the video? 43 minutes. All right. I'm gonna try to keep this one as close to an hour as possible, but there's a lot to say, right? And I don't want, once again, I don't want to sound too bearish, guys. I'm giving as an objective analysis as possible, and just telling you guys, talking to you guys more about the narratives at play so you can recognize what is happening right now in the markets. It's not just a one-day tantrum type of thing. There is a overall narrative shift right now from risk on to now more risk off and more uncertainty into 2025. Prior, 2, 3, 4 weeks ago, the bull market case thesis was very strong for 2025. Strong economy, strong jobs market, decent inflation coming down, bumpy road back to 2%, and the Fed continuously doing 4 more interest rate cuts. All that now today, with the comments from Jerome Powell, all that is now up for grabs, right? Inflation now up for grabs. Anybody's guess, right? Trump tariffs continue to be a concern. The jobs market, now apparently the Fed saying many factors can unwind the good progress or the healthy status of the jobs market right now. Interest rates pretty much higher for longer, cut those by half, right? So it's just a lot of uncertainty for the markets, and you're noticing a narrative shift from risk on to risk off at the current time, right? We'll see if that changes by the end of January, but I would not be surprised if we have more declines. Dow Jones, worst day all year, 2.58%. You cannot find another big red day like this. Oh, well, actually, sorry. We missed it by 0.02 or 0.2 basis points right there, 0.02%. The worst day was indeed the carry trade unwind day on August the 5th. So today, not quite as bad, but still second worst day of the year and the worst 10-day decline since 1974. So not the best in the Dow Jones, and the Dow Jones now has lost the daily uptrend as well. So loss of a lot of time frames, and they've now lost the most recent level of support, which was the gap fill for the election. Look, we've just almost filled the election candle for the gap fill, guys. Very, very important right now. Daily oversold conditions for the Dow Jones, 29. Look at the short-term time frames. 4-hour RSI, 17. 1-hour RSI, 13. So can we possibly get a bounce? Sure, but just understand any form of bounce, because of the size of this move down, most likely it will be resulting in any bounces just for a lower high. We'll study the size of the bounce, but essentially probabilities do state that we're looking for a lower high and either a revisit of the lows or possibly even lower at that point in time. Not looking the best. The next area of big support for the Dow down here at 41,900, just about 400 points away at this current time. The weekly time frames have been lost as well. First time we've lost the weekly uptrend since March, where we flushed it, we flushed the lows and rolled over like this. You see how long it took the Dow Jones to get it back? Takes a long time, right? That's why I say when we lose weekly uptrends, guys, you go into monthly consolidation. Look at if the monthly closes like this is big supply, big supply zone. You see this engulfing move, right? Big engulfing move usually can set a local bottom or top, depending. This would be a big supply zone, guys, and it takes a while to recover from that. I'm not saying they can't do it, but sometimes it takes a while to recover, guys. So please keep that in mind. Extend your time frames. Worst case scenario, or rather best case scenario, if you put yourself to an end of January time frame before we get market certainty back and start recapturing the weekly uptrends and whatnot, best case scenario is it happens a lot sooner, right? But at least you're setting the expectation in terms of a longer duration. We've lost the weekly uptrend right now, so now the bulls are no longer in weekly control. It's all it took, guys. One big red day from having no red flags to now having red flags. Any move higher on the weekly, looking for a weekly lower high into possible lower low as well. And that would not be good, especially if we do something like this, right? That's a pattern that everybody can recognize very clearly. The next stop after here on the weekly, guys, is 41,284. So in the event that we do set up the lower highs and start curling over, highly likelihood that we're going to retest there, and that will just be once again for monthly consolidation and possibly retest of the monthly 12 EMA, which we have not tagged since November of 2023. It is possible. We've done it a few times almost this far this year, so just keep an eye on that. Very noteworthy, right? The 10 and 20-year yields, we touched upon them a little bit. This is just, guys, they're just running away with it right now, right? We had the monthly downtrends, and now continuously pushing, guys. If you break these highs here, 4661, monthly downtrend is lost, and you may just hover here. Now that the Fed has said, well, the SEP, the dot plot has said that rates could be higher for longer, the 10 and 20-year yields can be very sticky. These are restrictive conditions for the economy. It's putting pressure on the economy, guys. Hopefully it doesn't put too much pressure on the economy, because then that's when the jobs market kind of starts to unwind. That's when companies stop hiring. right? And that's when profit margins start getting hit a little bit. So we have to pay special attention to these. This is a somewhat of a big red flag, in my humble opinion, this rapid rise in yields. This is the market saying that the Fed is wrong, saying that the Fed made a mistake by cutting 1% over the course of this year. The market has been saying since the Federal Reserve first interest rate cut, this is the market fighting the Fed. They are calling that this is a mistake by the Fed, a policy error. And now you're seeing the temper tantrum on those interest rates, but in the inverse direction, right? Either Wall Street's a very funny place. Either they want no interest rate cuts or they want more interest rate cuts. But what Jerome Powell is doing right now is not sufficient enough for them. So once again, I keep the same stance, guys. TLT is a very, very complex trade, and hopefully now you understand why. Hopefully now you understand why. I'm not opposed to playing this trade, but the time horizon has to be extended a lot further than you guys think. Moving into Bitcoin right now. Bitcoin flushing right now, flushing 100K. The Bitcoin was down just closing the day, right? 5.64%. And the altcoins, my entire list here, except for Phantom apparently, is all red. So this is to be expected, right? Risk on to risk off narrative. The dollar's not doing too well. Crypto is going to be very, very tough to fight the Fed at this current time, right? So now at this current time, in terms of Bitcoin, we have not lost the daily higher lows just yet. The daily higher lows are right here, 98,918. If you flush those lows, you've lost the daily uptrend. That would be the first loss of the daily uptrend since all the way, we have to go back a long time here, guys, all the way back in the month of October when we were at 65K. If you don't like that one, well, this one is clear as day, right? September. So September, it's been a long time since we lost the daily uptrend. If you lose the daily uptrend, the most likely scenario is the fact that we can set into the lower high, into lower low, and that will send us in our first weekly consolidation on Bitcoin pretty much in the last 3 months, right? It's been this glorious weekly uptrend, no signs of slowing down, and now might just be the time where we get a rollover here, risk off trade, risk off in crypto as well. And I'll remind you, the big area on the weekly to be respected is 91 down to about 87. If Bitcoin does this for the next 3-4 weeks, and then hovers around here, and then has a resurgence after Trump gets elected, after we hear some policies on what he's going to do with crypto, and we rally into the next year, which is probably in my consensus, I'm really thinking across the board, guys, December consolidation, January consolidation, early February consolidation, and then mid to late February, and then into March, we get the market rally again. Would this look so bad in the grand scheme of things? No, and it can be expected, so just please keep that in mind. Altcoins the exact same. If Bitcoin is going to do something like this, guys, do you think altcoins are going to rally? Probably not, right? So everything is going to consolidate. So now could be the time, if you have some very good gains on crypto and you want to take some off the table and just play a little bit of defense, would not be the worst idea in the world, in my humble opinion, but not financial advice. Now moving into our big tech names, let me see how hot we're running in terms of the video right now. Okay, 50 minutes, just about the time in Jerome Powell's speech. Give me a second for a sip of coffee. So Apple, look at this weekly chart, right? We were saying that Apple was getting very extended weekly overbought conditions. Big tech as a whole was overbought. Look, Apple, we covered this yesterday. Apple hitting 80 on the RSI on the daily. When's the last time it did this? Every single time that Apple hits this level on the daily RSI, we always find ourselves going into a little bit of a dip. That's exactly what's happening today. Now, that being said, the bulls do still look a little bit strong here, right? Setting up for the daily higher low patterns. Daily higher lows, for all intents and purposes, you can argue that they're down there because, yes, indeed, through this entire rally, they have never lost the hourly uptrend. You can find a bunch of double bottoms, but they never really lost. But it is a big area of consolidation that we're coming into right about now. I'll put a line here just to remind myself, right? So the true daily higher lows are here, but this is a very big level, right? If we come all the way down there and you forfeit most of this move higher, then what is the likely scenario going to be, guys? Do you think Apple's just going to V-shape this? When Apple is trading at a 3.5 peg, coming off severely overbought daily conditions with a MACD on the daily that looks like that, about to curl over, with a weekly overbought conditions, with a weekly time frame that looks like this, with a weekly candle close that could potentially close like this as well? Well, no, you're probably going for the breakout, the retest, and then run. So if Apple has 2-3 weeks of consolidation, which could be a real thing, and we start retesting down here, 237 down to 231 is the expectation for the breakout, the retest, and the possible run. All of the moving averages are there. We are very extended now from the 12 EMA, and we know when that happens, when all stars align, as they say, the further consolidation could be a very viable option. Now, I'm not projecting that that's going to happen. I'm just setting the tone. If we lose those major levels, you guys probably know what's coming. That being said, the bulls have not lost anything just yet. We have not lost 246, the area of consolidation, nor the 12 EMA, which is there as well. And we have not set any form of daily downtrend. This is one single day of consolidation. But I will remind you, if the narrative now is an uncertainty surrounding the Fed, surrounding Trump policies, what do you think is going to happen, guys? Are we going to reverse this in one day? Most likely not. I would rather be safe than sorry. So for that reason, I will be very patiently waiting for Apple to come back here. Very simply, if it doesn't come all the way back down there, I'm just not going to trade it. Moving on to AMD right now. So AMD, down about 2.99%. So very unfortunate. AMD actually had a very strong start to the morning, guys. A very strong start to the morning. They actually did something that they haven't done in a very long time, which is they got the hourly time frame back. Let me put it on regular trading hours so you guys can see. They got the daily uptrend back before the Federal Reserve meeting, something they had not done since the most recent leg early December. Usually when that happens, you tend to find a daily bottom and try to go for the daily upswing. So as of right now, the market completely unraveling. It's not AMD's fault. They tried, they had the pattern, and then Jerome Powell pretty much dropped the hammer, right? So that being said, daily downtrend simply continues on AMD right now. Unfortunately for them, the next area of support comes all the way down here, roughly around the 200 weekly EMA, which is 115. 115 all the way down to roughly 105 is the next big area of support. Weekly downtrend remains firm on AMD. So any further positions from me in terms of selling put options or any long positions or whatnot will be all the way down there, 114 down to 105. Very unfortunate. The company is trading very, very cheap right now, and the fundamentals do look good, but this is another byproduct of just the market completely unraveling, guys. AMD is not going to be able to just magically go green when the rest of the market is in an uncertainty phase. So please keep that in mind and be slightly cautious with your positioning. Moving into Amazon right now, Amazon down 4.6%. And I mean, this one as well had been daily overbought. And I was saying, I would not be surprised if the bulls are getting a little bit tired up here, a little bit tired. You can see how much of a struggle they had trying to push the higher highs right there. Now completely unraveling here, guys. 4.6%. It's been a long time since Amazon has come down 4.6%. 15th of November was one time. This back here in August was another 3.5%. Now that being said, Amazon's not looking the worst. Now, yes, they did lose the daily uptrend pattern by flushing two lows simultaneously, and the next expectation could just be for a lower high on any bounce into lower low for a daily downtrend, which we had not had since the early portion of the month of November. That being said, what are we looking for here? The bulls still do have a lot of control right now. Weekly uptrend, looking for a weekly higher low. And I was saying we are trading very extended right now from the 12 EMA. And usually when you do that, either you consolidate sideways for a little bit, right? And then touch it, or you just move into it right away. Big move up and then possibly come down. So can we possibly be retesting down here? This area all the way down to about 215, down to about 210. Yes, absolutely. The 12 EMA is slightly below that. That is the next big area of support. At this point, anything above 195, a lot of space, looking for a weekly higher low for further trend continuation. So consolidation on Amazon simply continues. I will be looking to buy the dip a little bit down here, guys. But as of right now, I'm going to be very cautious and very patient on my positioning. None of the fundamentals have changed for any of these big tech companies today, but the technicals, guys, leads us to believe that quite possibly we are embarking on one of the infamous weekly consolidation phases that they have had many, many, many times throughout their history. All these weekly red candles and downswings, those are weekly consolidation, and now we might just be embarking on a new one. Moving into Google right now. So Google, same concept as well, 3.54% to the downside. They were hitting real nice highs yesterday, high of 202, and now Google is already down. Well, today they were down 3.5%, 6.5% from the highs, right? So Google also forfeiting the higher low sequence. So it was a nice daily uptrend. Higher lows were planted and they put in the higher highs. And now, unfortunately, we have lost the 191 higher low. Now the expectation is possibly for lower high into lower low continuation. So any bounce will probably just result in possibly a further downside leg of selling. Why? Well, because we are due for a little bit of weekly consolidation. Big move up beyond the all-time highs. Now might just be a factor for a retest on the weekly before we can possibly embark on a new version of the rally into January, maybe mid-January type of thing, right? So keep that in mind, guys. We would not be surprised if Google does consolidate. Did a great job, consolidation into possible rally, but for that reason, I'll be patient. I'll be looking to write some puts again, 180 down to about 175. But as of right now, I'm just really not touching anything. I'm going to let the market cool off, let the market play out, let the narratives kind of battle it out right there. And I'll be sitting down there for the juicy dips because now we have a lot of buying power to do it. Moving on to Meta. So Meta as well, big red day, 3.6% to the downside, and also forfeiting the sequence of higher highs and higher lows. Now we have the daily downtrend underway for Meta. So daily downtrend is underway. A big move down. The expectation is now for a possible lower high into lower low continuation. If they don't, as soon as they stop dropping, that'll be the expectation, right? We'll study this day by day, coming into the retest area right now, which is pretty much the 600 down to about 580 range. So we'll see, can the bulls protect this weekly uptrend they have going right now, or will we give back too much and once again go into a little bit of sideways consolidation action as we've had back here? So far, not looking the worst. We have not lost any major time frames, and that's the major point here on big tech. Apple, no loss of the weekly. AMD, they've always lost the weekly. Amazon, no loss of the weekly. Google, no loss of the weekly. Meta, no loss of the weekly as well. We are coming into support. We will see how it reacts to it, but not looking very strong. High momentum to the downside. Daily MACD crossing over now, so it may just be one day more of selling. I know I've said that I've been looking for the breakout retest, but this is too hard, guys. I mean, the market is not real estate. Keep that in mind, right? If it comes down way, way, way too hot into a level, and you know that there's a broader factor at play, if Meta was only doing this on their own, from bad news from like the Department of Justice or something like that, and the rest of the market was fine, okay, we can talk about taking a possible reposition here. But right now, with overall market consolidation, I'm more than happy to wait on the sidelines for more clarity on, number one, the narrative, and also more clarity as to where we can possibly find some weekly higher lows before positioning. So keep that in mind on Meta. Microsoft, same concept. Microsoft did a great job of rallying all the way up to 454 yesterday, and now clapped back all the way to 437. So really unraveling the past 2 weeks of trading. They were slightly overbought conditions, and now coming right back down there very, very quickly. Hourly oversold conditions already, RSI at 24, 3.76. I mean, when's the last time Microsoft had a 3.76 day to the downside? Has to be earnings, right? They have not had that many of them. And now, same concept. The bulls had the daily uptrend going for them. Now we have lost the higher lows, which are right here. And now we have lost the daily uptrend. So the expectation now with such a big move down, even if we do bounce, looking for a lower high into lower low. Now that you know that daily downtrend is likely, we know that we are embarking into weekly consolidation. And same concept as Meta, right? We know we have the weekly uptrend right here, but we know now there's larger factors at play. I still like this 435 to 425 area for a little bit of a bounce from Microsoft, right? Because they still do control the weekly uptrend, but it's coming in hot. We will see how it reacts to it. If they can protect these weekly uptrends, I wouldn't be opposed if we do come down here again to writing some short puts under, or maybe taking a little bit of a cheeky swing trade here. But the positioning for me is going to be very, very light because we're noticing a true narrative shift in the markets right now. We have to be a little bit more cautious than not, right? Moving into NEF, the context is very important, guys. Not only the stock's individual levels. For sure, nothing's changed fundamentally about Microsoft, but you guys know what I mean by now, right? Netflix, same concept. We were noting how extended Netflix was. It was a pure rocket ship since their earnings. All good things come to an end. Weekly was overbought for the past 4 or 5 weeks, and now all good things come to an end. Netflix is not spared either. Loss of the daily uptrend and loss of the 12 EMA, which we have not lost since the earnings 3 months ago at this point. So daily downtrend continuation is likely at any point in time. We're expecting a bounce, probably for a lower high, probably for a revisit of the lows or lower. That being said, daily downtrend means we are already into weekly consolidation, and that is clear as day. Where can we maybe go touch again? 835 is going to be the next level for me. Looking for the weekly higher low. Good thing for the bulls though, a lot of space. Anything above 750, looking for that weekly higher low for possible further trend continuation. And even if we roll over this on the weekly, guys, into early January, into the inauguration, just understand what we're going for here. Monthly consolidation. Look how extended we are from the 12 EMA. Very extended monthly overbought conditions as well. Would not be surprised if we do have a red December, red January as well across all names, right? Big techs rallied a lot. The monthlies were looking good. I mean, Microsoft's not looking too bad right now. Apple, wouldn't be surprised. Amazon, wouldn't be surprised, consolidation. Google, wouldn't be surprised, more consolidation. Meta, wouldn't be surprised, more consolidation. Microsoft been consolidating for a year at this point. And now Netflix, would not be surprised. Moving into NVIDIA right now. NVIDIA down only 1.14%, but NVIDIA, I mean, they're actually down 5 because this morning they were up 4 whole percentage points, guys. Look at this gap up, right? Huge gap up open, almost up 5% today at one single point today. And from the top to the bottom, down 6. So even though it doesn't look bad, it is pretty bad if you measure from the tops, right? That being said, we have never changed the daily uptrend. We were looking for an engulfing move to change the daily uptrend, and it was looking good this morning. But now all we get is quite simply the daily downtrend possible continuation again on NVIDIA. Support stays planted 130 down to 125. However, if you lose this in a big way, I'll let you guys know where exactly we're going. We are going right back down to 119 to about 115. This is an area where I will be positioning a little bit more in NVIDIA, regardless of what happens to the market. At that point in time, NVIDIA would be off its highs. If we get all the way down there, guys, it would be off its highs 24%. Usually when NVIDIA is down 25%, it usually is a decent buying opportunity in the markets. But once again, this one is one that I'm going to be maintaining patience on as of right now. We have not lost the support levels. The weekly as well, it is a weekly downtrend, right? And in the monthly, you would not be surprised if this month ends exactly like this, red as can be, and even January might consolidate a little bit more. I'll remind you what we're looking for. It is a monthly uptrend. You're looking for a monthly higher low for further trend continuation. Pull back down to the 119, 115 with the monthly 12 EMA right there. Overbought conditions could be now more manageable. And that is possibly going to be a buying opportunity for NVIDIA. Tesla down 8%. So many people asking me, can I buy Tesla? Can I buy Tesla? Well, now, Tesla's been having one big day of consolidation as a whole. From the top, guys, very big drop, right? From the top to the bottom of the day, 12.5%. So Tesla can move. If it's volatile on the upside, it will be volatile to the downside. We were noticing record levels of RSI, after which point usually we do tend to have some pretty decent pullbacks, and today was no different. You'll notice all the time it's happened in the past. We have a little bit of a pullback. Good thing for the bulls, they've created an absolute ton of space right now to where at this point, anything above, let's call it 350, just gonna be looking for a daily higher low for further trend continuation, right? Daily higher low for further trend continuation. But if the bulls give back too much of this move, you can open up the door for lower high into lower low, which will be daily downtrend, which would be into weekly consolidation. And the way this weekly candle is shaping up, probably looking like you are going to get some of that weekly consolidation at that point, right? So next target, 410 on about 380, which is the previous all-time resistance, which should now be acting as a short form area of support for the bulls. If Tesla does something like this, right? If Tesla does something like this, consolidates into January perhaps, and then puts in another rally into maybe February and March, would it look so weird? No, Tesla does this all the time, right? So watch for that consolidation. If you come down hot into this level with this support, I might be cheeky and play some short puts all the way down here because I wouldn't mind taking assignment on those Teslas and riding them into 2025. But one thing's for sure, Tesla has run a lot. And when things run a lot, guys, I mean, when they can run a lot to the upside, don't be surprised if they can pull back just as fast to the downside in trying to seek out those higher lows. Moving into Palantir right now, I mean, we're almost done, but let me just check the time here. Okay, 105, not too bad. Moving into Palantir right now. So Palantir as well, right? Down about 3.87, but not the worst day for Palantir, but same thing as NVIDIA, right? When you measure for the top, Palantir was actually down from the high of the day, which were right before the meeting, high of the day down 9.3%. This has been one of the worst days for Palantir in recent memory since this top to bottom decline right there, which was 12%. So here we go, guys. Possibly. It's not lost yet. We are coming into the last area of defense, 72.50 down to about 69. If you lose these daily higher lows, 68.36, that will be a confirmed daily downtrend, the first of its kind since all the way, I mean, this one is slightly debatable, right? The October one, but this one is for sure. Last August is the last time we actually set a true daily downtrend in motion. I'll show you what it looks like. It looks like this. Huge rally after earnings, and then into daily downtrend consolidation, and we did get the rally thereafter. Does this look familiar? Huge rally after earnings, and then daily consolidation down. It would not look that strange, right? So keep this level in mind, 68, pretty much. We have not lost it just yet. I'm not saying Palantir is done for. We can simply bounce in terms of tomorrow's trade. That is very possible. If the markets recover, if tech recovers, and if Palantir bulls show up tomorrow, possible. But I would not be surprised if we do lose that support line and the higher lows right there, if we go into further extended daily downtrend consolidation, which could take us down into the low $60 range. And at that point, we'd just be looking for a weekly higher low at this point, right? Very clear right there. Anything above $41 is a weekly higher low, guys. Why? Because we never lost the daily uptrend this entire time since earnings. We consolidated sideways for a little bit, but we never lost the actual trend by setting lower lows. So this is just one big weekly move. It can afford some consolidation. It can afford to cool down the RSI right now, which has been overbought for the last 5-6 weeks in a row. It can afford to cool that down and come back and tag the infamous 12 EMA at the lower $60 range. I will be waiting patiently for Palantir. If it comes down here hot and the market is selling off hard, well, I will be looking at position maybe mid to high 50s for some short puts and benefiting from that volatility. So that's going to be everything for today, guys. We'll do a more in-depth recap, of course. The high flyers, guys. I mean, be very careful on the high flying names as of lately, guys. I'm talking about the drone plays, the rocket, the space plays, right? The quantum computing plays, the the SOFIs, the PLTRs. You guys know exactly what I'm talking about. The high-flying momentum names of the last 2, 3, 4 weeks. Be very careful because they will be the ones that'll get hit the hardest if you have a risk on to risk off movement in the markets. They've ran an absolute ton, and nobody would be surprised if they're going in for a leg of monthly consolidation, a much needed leg of monthly consolidation after absolutely tremendous rallies. We'll cover a little bit more of them on Friday. So that's pretty much it for today. I think we've covered a lot today. Don't want to bombard you guys with even more tickers. We will let the markets even out over the next 2 days. We'll get a sense of what analysts are saying, how the market is kind of taking in the information, if institutions are changing up their positioning or whatnot. We will all get that clarity in the next 2 days with more technical levels as well. And we will be able to make a more educated decision as to be able to move forward. But one thing's for sure, guys, now's the time, especially if you're concerned about this uncertainty, especially through the end of the month of January, not a bad idea to take some of those gains, right? Take some of those gains possibly off the table. Worst case scenario, covered calls are always a great option, very, very great option, especially if you have some gains and we want to protect those gains. As of right now, I still remain cautiously optimistic on the markets as I always have been, but you will see a change in my positioning to where I am more defensive, not as aggressive. I will be closing a couple of call positions that the levels have now been broken, that the thesis has now come undone, especially for something like the IWM and a stock like Enphase, which is reliant on ever decreasing interest rates and a risk on narrative in the market, which can lift up all other sectors left behind. So a few of those trades here and there, I will be cutting, but a lot of my other trades on high conviction names, I will be covering them up and just riding this through this wave of uncertainty. So not a bad idea, guys, to just kind of be a little bit safe because the market is telling you one thing. There is a lot of uncertainty right now. And if you just remind the bear thesis is coming more and more alive every single day. So we cannot ignore exactly what's happening today, guys. Right? We went through this early on in the video. We cannot ignore it. You have to be cognizant of it. It's okay to still be bullish, but we cannot ignore that we are due for a possible consolidation phase. And you guys know if there's one thing the markets are going to use for this consolidation phase, a weekly consolidation phase, a monthly consolidation phase into January, guys, they're going to use this uncertainty from the Fed as the catalyst to drop the markets. You may not agree with it. You may think it's unfair. You may think it's BS, but it is what it is. The market is going to use that as a pretext, as an excuse to drop the market, put a lot of fear in the market, put a lot of uncertainty, a lot of doubt in people's minds. I'm pretty confident that 2025 can be a very bullish year because as of right now, I do not believe inflation is going to become a problem again. I don't believe the economy is going to fall off a cliff. I don't believe unemployment rate is going to absolutely skyrocket to the moon. I do think we should have a fairly good 2025, but can they use what just happened today as a pretext, right? Context to drop the markets through end of December, early January through the Trump inauguration? Blame everything on Trump and the tariffs and whatnot. Blame everything on the Fed as well. The uncertainty behind the Fed decision today. Absolutely, guys. The market is built on narrative. So recognize what's at play here. Even if you do not agree with it, you should position for it and manage the risk accordingly. Knowing full well in the back of your mind, yes, we are still overall bullish on the markets, but we're not trying to get greedy right now. We have to understand when there's risks at play, we have to acknowledge those risks and position accordingly. It's not time to go YOLO right now. It's time to take a back seat, wait for the market to come to you. Build a watch list of your favorite names, the levels that if they come back down to you're interested in buying, and wait. Just patiently wait, guys, patiently wait. If they don't come to those levels, trust me, there's always other opportunities in the market, guys. But more likely than not, we are going to come back and revisit a lot of the levels that we left off from in the month of November after that election. So that's everything for me. Tomorrow, guys, unfortunately, I'm sorry, no video for tomorrow. I will be pretty much flying back home as of tomorrow, so I can't really film a video because my flight is literally after the market close, and by the time I get back to my house, I settle in and everything like that, I'd have to upload a video at midnight. To be quite honest with you, I'm not sure if I'm going to be able to. Maybe I'll surprise you guys, but the expectation is no. But we will do a very large recap on the Friday session, so hopefully all you guys are able to manage the uncertainty very well. So thank you very much for watching the video, guys. Hope I didn't sound too bearish. I just want to make light of things, as objective as possible, present you the narratives, and even if you don't agree with the narratives, I too do not agree with the narrative, but we have to manage the risk, guys. Risk management is is aspect number one in these markets. Not the time to be over leveraged right now. You don't want to sacrifice all the nice gains we've made this year because we're over leveraged and we just disregard the uncertainty, disregard the narrative, clear narrative shift in the market right now. And you know what I mean? So just be cognizant of what's currently at play right here. So thank you very much for watching the video, guys. If you did enjoy this video, consider dropping a like. I'm not calling for doom and gloom at all, right? We're just setting the expectations, guys. I'm not saying market crash, recession, SPY's going down 75,000%. No, but we have to acknowledge the risk and change our positioning accordingly. You saw me go a lot more risk on from the election, and now that the narrative is shifting again, well, now it's time to kind of unwind those positions. We tried them. Some of them worked perfectly. Some of them didn't work. It is what it is, guys. The game, that's the game. Game is game, right? It's all it is, right? So thanks very much for watching. If you enjoyed the video, consider dropping a like. Consider subscribing to the channel if you're new as well. We do these every Monday through Friday, unless when I'm traveling, like such as tomorrow. And as well, guys, if you have any questions, now's the time. Leave them down below in the comment section. I'll do my best to answer them into tomorrow's session as well. And as a whole, guys, if you're curious about the Discord, if you want to join the Discord as well, in terms of getting my real-time plays, so all of the plays that I fire off in real time, whether it's hedges, whether it's call options, whether it's the wheel trades, short put options, call debit spreads, all the trades in real time, guys. Link to the Discord is down below. We also do private morning live streams every morning for about an hour or two in the morning, provide clarity on the market, trade opportunities, stuff like that. And also in terms of insights, in terms of questions, if you guys have questions, you can ask me all throughout the day, and I'm usually very, very quick to respond. So if you want more insights and opinions and whatnot on your positions, on the market in general, if you want more clarity, that is also a service that I offer too, of course. Private videos as well about psychology, different trading strategies, technical analysis, stuff like that. So a lot of very good things in the market. A lot of our members have been having great success in terms of just being able to now manage the risk clearly, identify setups more clearly, be more patient, and as a result have been having a lot better success ratios as a whole. So if that's something that interests you, if you want a lot more clarity, a lot more consistency, a lot more different strategy opportunities and whatnot, or just want to discuss about your portfolios and stuff like that, well, the link is down below in the description, guys. Not financial advice and not trying to push you guys in there. It's there if you need it, right? So hopefully I see you in that Discord. And if not, guys, well, of course, always a pleasure. I will see you back on the channel. Take care. Have a good one. Just relax, guys. Take a deep breath. It's the weekend soon, right? Just get some clarity in our minds. Decisions that we make need to be logical, not emotional. So even if you do close some positions at losses, guys, have a plan. Yes, you're exiting the position, but if you exit tomorrow because the market's red and then Friday's green, don't just jump back in, right? Approach the market with a very logical mindset here. If we are exiting positions due to uncertainty, then it stands to argue the only time we re-enter those positions is when we have certainty, right? So we are willing to pay for confirmation. If that means that we have to close some positions and buy them again in a month when the market is higher and we have more certainty, that's fine. At least we respected our thesis and we managed the risk accordingly. Long-term portfolio, nothing to worry about. I never sell any of my long-term stocks, holding these for the next 5, 10, 15 years, guys. But trading portfolios, we have to follow the narrative, so keep that in mind, guys. Always a pleasure. Thanks for watching. Take care and peace.